Now, one of the important questions which one need to understand when analyzing whether or not Article 19 is applicable is who potentially could be the payer. We saw earlier that there were three categories which were covered. The first is a contracting state, which could is the government of the concerned country. In our case, it could be the Indian government. But here one of the questions which come up is, can a government company which has a corporate status be also considered as government? Which means that if there is a government company which is running business for profit, if it employs an individual and makes a salary or a remuneration payment to him, would that also be covered by Article 19, or would that be covered as dependent personal services under Article 16? The answer to that lies in the fact that if the government company is actually just running a project of the government for which certain specific funds have been allocated, in that case it can very well be considered as payment by the government. But if the government company is running a business for profit where the direct intervention of the government is not there, even though they might be the substantial shareholders, that case may not be covered under Article 19. A subdivision of the government, which could be, let's say, a state in Indian context, or a local authority, which could be a constituent state, certain regions, provinces, departments, cantons. Cantons may not be relevant in the Indian context, but it's there in Switzerland, districts or municipalities. If any one of them makes payment for remuneration other than pension, it will be covered under Article 19, provided other conditions are satisfied. Now, some of the variations which are there are, if you look at India-Korea Treaty, Article 24 there, right? We were talking about whether or not a government company is covered, right? Article 24 of the India-Korea Treaty provides that this provision of paragraph 1 shall likewise apply in respect of remuneration or pensions paid in case of Korea by the Bank of Korea, the Export-Import Bank of Korea, and the Korea Trade Promotion Council. So effectively, what has been done is that for the purpose of Article 19, which we were talking about government services, which coincides with Article 20 of the India-Korea Treaty, even the payments by the Bank of Korea, Export-Import Bank of Korea, and the Korea Trade Promotion Corporation will be considered as payments for government services. In case of India, by the Reserve Bank of India and the Exim Bank of India. So in these cases, if RBI or Exim Bank of India makes a payment of salary to someone else who's a non-resident, who is a tax resident of Korea, in that case, even those payments will be covered under Article 20 of the India-Korea Treaty. And by organizations recognized by and agreed between the competent authorities of the contracting states. Another variation or a specific word which is there in the context of India-Japan Treaty. What it says is that the services which are rendered by the non-resident individual should be rendered for the discharge of the function of the government nature. What this means is, when the individual is rendering services to the government, the purpose for which these services are being utilized should be such which is a function of the government of India, right? In respect of services rendered to that contracting state in discharge of functions of a governmental nature. If you are running a company, if the government is running a company to earn profit, that's not normally which is something, a function of the government. The government is supposed to maintain law and order, maintain equilibrium, maintain the economy and stuff like that. But if you are running companies for profit, that's not a discharge of functions of a government nature. that may not be covered under the India-Japan Treaty, right?